What is up, everybody? Welcome back to Bitcoin and Markets. It's been a while since I streamed, but we are going live on YouTube, X, and Telegram. Main community is over on Telegram, so make sure you guys check those links below. And today we are going to go over. Oh, am I not even on the right screen? It's been a while since I streamed, so I'm going to have to get used to this. What's up, guys? What you're seeing here on the screen is the website bitcoinandmarkets.com. We have a monthly price forecast competition. You can see that here. The closest person to the monthly candle close wins $20 in sats over the Lightning Network. So check that out. But I also do a lot of other writing here. Minimum of one a week. Try to get out 2 posts a week to the premium content guys. That would be a macro and a Bitcoin post. But check that out, bitcoinandmarkets.com, for the different tiers of membership. And I appreciate it if you just want to sign up for the free newsletter. That I haven't done the weekly newsletter for a while, but I do randomly do blog posts as well, so you guys can check that out. Okay, let's take a look at Bitcoin price. And we're going to take a look at Bitcoin price. We're going to take a look at jobs numbers. And I need to share my screen on Telegram, don't I? See, I am all out of sorts here. I took a hiatus from streaming on YouTube. Gonna maybe get back into that a couple times a week. So if you're watching on YouTube, make sure you like, comment, subscribe. Appreciate that. Okay. So I need to share this tab with them. All right. I think we are good to go now. So Bitcoin is breaking above this yellow trend line that we've been watching for a very long time. And it's feeling pretty good. Okay, I thought this might be the breakout back here on the 29th, but we did not break out above. Had a couple day, just getting those longs, liquidating those really high leverage longs before we go and break out. So this is a very good looking chart now. When we were down here at the bottom, around 100, it wasn't a good looking chart at all. I thought we might go down and test maybe the 200-day moving average, just pull that up. You can see above the 50-day now, 200-day moving average. Thought we could go down here and test the 200-day moving average, get to oversold conditions on the daily, which we did not do. But now we are going back up, and MACD is crossed bullish. RSI is in a nice on the bullish half of the channel there, and everything is looking good to go. Let's take a look at some other markets here. Let's take a look at gold. Gold is up on the day. And where are my drawings? There's my drawings. We are still in consolidation. If we do have a Fed cut in July, which is looking increasingly likely, which we'll get to the jobs numbers here in a second, gold should rally as well. I am bullish on gold, but I am very much more bullish on Bitcoin. Okay, DXY. It's positive on the day, but this is looking pretty bad. Again, I think as soon as they start cutting rates, we'll see the dollar really surge. And it's falling, but it's not falling very fast. If we go year to date here and put it on percentage, it's 10% year to date, okay, minus 10%. And that's not purchasing power. That is relative to other currencies. So one reason why the DXY would be getting weaker relative to other currencies is in the initial phases of a recession, like say there's a recession in Europe and China and Japan, they would be dumping dollar-denominated assets to save their balance sheet and not be going insolvent and stuff. So that's the first initial phase. But once it progresses, then there's a dollar shortage and everyone rushes into the dollar. And so the dollar can really bounce very, very quickly. However, if we go back to September of last year, at this low, we're only 3% off of the September low. So again, the dollar, it's low, but it's falling slowly, but I don't expect the bottom to fall out or anything like that on the dollar. It's a very unique perspective from a Bitcoiner. Most Bitcoiners, they are inflationistas, and they think the dollar is going to collapse. Of course, the dollar is the cleanest dirty shirt out there, so we should expect other currencies to collapse. I mean, the Japanese yen, their central bank owns like over half, I think maybe even 75% of the ETF market over there, maybe half of the entire equity market, a majority of all the government bonds, and they're like 300% debt to GDP. The yen is going to collapse before the dollar. Euro is in a worse place too. The world is going into a era of de-euroization, not de-dollarization yet, but de-euroization first, and then after those other currencies fall, then perhaps the United States dollar will face a crisis. But going down is not necessarily a loss either. Remember, for the Fed to lose, we have to have deflation. The Fed doesn't mind slight inflation, 2-3% inflation. The Fed loses if we get runaway deflation, and so that would be the dollar getting much stronger. And if we zoom out here to monthly candles, we can see that since the great financial crisis, the dollar has been up. In the QE era, the dollar has been up, and this is the Fed losing. All right. The Fed is losing as the dollar goes up. So this little blip over here on the end, it's not really anything significant. Overall, we will see a continued strengthening of the dollar over the next 5 to 10, 20 years. And then eventually they'll back the dollar with Bitcoin, and that's all she wrote. Okay, US 10-year. Let's go down to the daily. Have all sorts of stuff on here. So let's just walk this through. Since I am streaming to YouTube and Twitter, and most of you guys you don't follow my stuff on a daily basis, I do talk about this stuff on a daily basis in the Telegram chat. But you can see the dollar bottomed here as the Fed started cutting. The 10-year yield bottomed as the Fed started cutting, and we had Trump and China bazooka, Trump-opium and China bazooka. Trump is seen as pro-business, and then China stimulated because they're in such a horrible recession. It was an ungodly amount of stimulus, something like 25% of their GDP. They did in this China bazooka, and I think they've done another one since. And so that forced the 10-year yield up. Remember, the 10-year yield goes up when there's optimism, because growth and inflation expectations. Really, it's growth/inflation expectations, not growth and inflation expectations, because inflation and growth in a credit-based system are generally the same thing. That's why on the Fed's SEP, their summary of economic projections, they project long run 2% inflation and long run 2% GDP growth. It's not a coincidence that those things are very similar, because they are very related. They're almost the same thing. Okay, then we topped out here in January of this year. Started looking like we were going to continue the downward momentum. Then there was a scare in Europe where the Swiss government bonds yield spiked. They also had a rush into the euro and away from US dollar denominated assets. Then that was followed by a scare in Japan. And in Europe, the Swiss National Bank cut rates, and the interest rates in Switzerland are very low. So they're kind of the safe haven for Europe. And you could tell there was some European trouble going on there. So that was that first spike. And then Japan, they had a scare with a spike in their yields and perhaps some sort of financial event. And so yields rose here. But now that stuff all seems to be taken care of until the next crisis. And we should continue down here. I'm still expecting rates to fall. Remember, rates fall when you go into recession, because they fall as you have pessimism and people fleeing to safe and liquid assets. They're going to flee into government bonds. So that's the US 10-year. Oil did have a positive day and kind of breaking out above our long-term support and resistance area, shaded area here. So we will see where that goes. I think the UK, the Brent futures did not move nearly as much or any compared to the WTI futures. And finally, the stock market setting very close to all-time high. Let's see, where is this? No, they are at all-time highs. So yeah, new all-time high again today for the stock market. We will see when Bitcoin follows. Again, Bitcoin now at 109, breaking above this downward sloping trend line. Looking very, very positive here for Bitcoin. Okay, let's go into the jobs numbers. One thing, I've been talking about recession for a long time. I pictured that we were going into recession when COVID hit. 2018-19, the economy was slowing, and then COVID hit, giving the government the excuse to put out these stimmy checks and really crank up the spending. And so that temporarily relieved the world of the next recession, the follow-on recession from the great financial crisis. It's coming. It's still coming. We are waiting for it. It's hit China, it's hit Japan, and it's hit Europe. We're just waiting for it here to start affecting the United States, and it might be. So let's go to this Zero Hedge article. ADP reports biggest drop in service provider jobs since the COVID lockdown. Remember, service jobs are very important to the Fed. If they start seeing some job cuts here, then the Fed is definitely going to take notice of that. Yesterday, the Powell, I think I have that in. Oh, I didn't send out this tweet. 1 second. I'm going to forget about this tweet for now. Let's go to my likes, and we'll find the J Powell, if I like that, real quick. See if I can find it. Oh, I actually posted it. There we are. 135 people watching, guys, over on YouTube or over on X. What's up? I'm live streaming on YouTube and Telegram as well. Check out the Telegram. It should be in the pinned tweet. You can find those links. I'm just trying to find this one right here, and I'll share this tab. And let's back it up and all right, let me make sure that's shared. What's up, guys? I'm going to make sure that, yeah, that was also with the audio, so that's good. And switch you around. Or actually, we're going to go to this one. All right, so guys joining on YouTube, I used to stream 3 times a week, and I was pretty proficient at it. I haven't been streaming for about 6 months or so, maybe a little bit longer, and just getting used to it. They updated a little bit on the back end here. Okay, so that was Powell saying that he would have cut more, or he would have continued cutting if the Fed or if the Trump did not put on the tariffs. Of course, this is a big problem for him because they're supposed to be data dependent, and that is not. It's getting into some politics here, like expectations, not data. They're supposed to be data dependent. Okay, let's get back to the ADP story. And for some reason, I'm getting a double thing here. Okay, well, I'll have to figure that out later. So there, that's the right one. Make sure it's going out on Telegram. And then bring up the chat. Dex Invictus, what's going on, man? Boss. Yep, back on YouTube. Well, at least for today, I'll try to do maybe once a week going on YouTube as well. Really want to grow the membership in the Telegram. We're at about 750 members there, and also on the website. So make sure you guys are subscribed over there on the website. Okay, ADP. Let's get into it. Having trended weaker for the last 2 months, analysts expected a modest bounce back in the ADP employment report for June, following a mixed picture for the ISM PMI for employment and another mixed bag from the Challenger Gray jobs cuts data this morning. But the headline print saw a 33,000 drop in jobs in June and a downward revision of plus 20 to plus 29 in May, the biggest first drop since March of 2023. So going back 27 months to the last drop in the ADP numbers. And this is a big deal, very big deal. The wheels fall off when people start losing their jobs. And you can see this is a very obvious downward trend to negative now. Where in 2023, this was kind of a one-off month. I don't know exactly. Was March of 23. That's when the Silicon Valley Bank, Signature, those guys went under, right? So that could have had something to do with that. But it was a one-time dip. This is actually at the end of a trend, a downward trend going into recession. It's a 5 sigma miss from expectations. So expectations were up here at 37,000, it looks like. Well, let's see. Middle of expectations was about 90,000 gains, and we had the 33,000 drop in jobs. And the biggest miss since August of 2022, third monthly miss in a row. One thing I think of is, everyone always says that these numbers are doctored. Okay, well, if they're doctored under Biden to look better, now they're being revised down. Perhaps they are being doctored here to force Powell to cut, right? There is some incentive there to doctor these numbers lower. I'm not saying they're doing that, but there is that incentive there. Though layoffs continue to be rare, a hesitancy to hire and a reluctance to replace departing workers led to job losses last month. After losing 2,000 jobs in May, good producing firms managed 32,000 job additions in June, but service providers' jobs dropped 66,000. And remember, that is the one that the Fed really watches, is the service sector. The biggest drop since the COVID lockdowns. You can see right here, if we can make this bigger and move my head. Let's see if we can do that. All right. You can see the biggest drop here in the service sector, where the goods producing industries is gaining. So this is exactly what Trump wants to see, actually. A return to manufacturing and, well, not necessarily a decrease in service, but return to manufacturing. So that's good in Trump's eyes. The job losses were denominated by smaller businesses. So you see smaller businesses had bigger numbers dropping, mid-sized and large. Okay. These are some new graphics from previous times talking about the jobs numbers. I know Zero Hedge just recently got bought, I believe, by another mainstream news outlet. I'm not sure which one. So maybe they're doing a few things differently. Job gains were dominated by manufacturing and transportation, while job losses were dominated by professional and business services. Not good for the economy here. Still, the slowdown in hiring has yet to disrupt pay growth. Year-over-year pay growth for job stayers was little changed for June at 4.4% annualized compared to 4.5% annualized in May. Pay growth for job changers was 6.8% annualized in June and 7% last month. So slight slowdown, but it's still really strong wage growth for those people that are keeping their jobs. This should turn over, though, as well. Of course, this will all be blamed on Trump's tariffs, but it's hard to see how that makes any sense given the surge in manufacturing jobs where the tariffs would hit, while services, which we do not import, saw major job losses. Very true. So will Powell consider rate cuts now? That is coming out of Zero Hedge about the ADP numbers. Let me check the chat and see if there's anything going on. Working like always, trying to prepare for what may be coming. Yes, guys, this show, I try to focus on being descriptive about what is happening. I'll go back up to the top here. I try to be descriptive about what is happening and not prescribe anything. Okay. I mean, maybe I'll say it's smart to buy some Bitcoin, but I'm not going to say like um, the Fed should cut or we should increase spending or anything like that, or even make linear extrapolations. That's one of my biggest pet peeves is when macro analysts, they make linear extrapolations and they say, okay, so the 10 year is going up right now. If it continues to go up like this, all hell's going to break loose. Well, yeah, but if is the big thing. Let's talk about why the 10 year is going up right now. Diagnose that and then use that to make a prediction about the future. So that's what you get here on Bitcoin and markets. John Delaney, what's going on? Dex Invictus says lots of hours getting cut at his job, but not his specific hours. Yeah, so that's some anecdotal evidence. Let me check Telegram, see what if they're chatting anything up over there. DT, this was before we went live. We were looking at Google Trends for, I'll share that tab too. We were looking at the Google Trends data and it's showing nothing. But I was saying that retail is here. They're just buying IBIT, MSTR. That's where the retail is right now. And they're not going into the shitcoin crypto sector. And DT says they don't need to Google Bitcoin anymore. And that makes a ton of sense, yes, because their financial analysts said, hey, have you thought about buying a little IBIT, putting about 3% allocation into IBIT? And there you go. That's how we're getting the retail guys in here. So I'm showing that I'm sharing two screens. Let me see. Yeah, for some reason, it has me sharing two screens. I'm going to try to fix that. What's up, everybody? All right. So we'll go back to this. You guys did not see that. All right, so there is the Google Trends data, and there's no bounce whatsoever. Okay, so we did ADP. Let's go in. What we've been doing a lot on Telegram live streams. I haven't been just disappeared from the internet. I've been on the Telegram chat. And what we have been doing is I go through and I like tweets, and then we do a live stream about them. We just watched here about Powell. Let's go back and see some others. So this was very interesting from Swan. Bhutan has 27x more Bitcoin per person than the United States. This is a very interesting chart. So the US has the most Bitcoin total, but we have 59,000, 60,000 sats per person, where Bhutan here has 1.6 million sats per person, even though they only have 13,000 Bitcoins overall. El Salvador has more sats per person than the United States, and so does the UK, interestingly enough. But hopefully this changes and we start upping our Bitcoin holdings for the United States. From the Bitcoin historian Pete Rizzo, just in, over 8% of President Trump's net worth is now invested in Bitcoin and crypto, unfortunately, but there you go. That's from Bloomberg. Just a good sign. I mean, how long did I remember the days when we, like Marty Bent, I think it was, who first made the prediction that the person who won in 2024 was going to mention Bitcoin. And he'd made that prediction back in 2020, I think, or maybe 2018 even, that the person that won in 2024 would mention Bitcoin. And now we have somebody who's talking about a Bitcoin strategic reserve who has 8% of their wealth in Bitcoin. It just all makes sense. Bitcoin is not going away. That's definitely part of this. Okay. Now, oh man. So you guys that are joining us on YouTube and Twitter, Tom Lee, I started really liking him. He's quirky, very, very quirky, and he grew on me. And so, I was, every time I would see him going on CNBC, I would say, Oh yeah, I really like Tom. Let's listen to this one. Then now he's launching some Ethereum BS, trying to copy Michael Saylor, but with Ethereum. And so, he's dead to me now. But anyway, we are going to be watching him talk about Bitcoin supply shock here coming, and could go to 3 million. John Jay, what's up? Just going to bring up the other comments. Oh, point. I saw that chart. Let me bring this up real quick, because it has something to do with what I said the other day as well. Well, I mean, my most liked tweet over the last 6 months, probably. So this guy says, Bitcoin update. Few understand that Bitcoin is being primed for a major sell-off. And look at the scale on this chart. It is in linear, right? It's linear scale. And I made a tweet just a couple days ago that most people that are hesitant about Bitcoin, they only look at charts in a linear scale. They don't look at charts, Bitcoin chart in log scale. So let's go. It's funny that this got so many likes and stuff, and this tweet was so popular when I had just said this the other day. I'll have to scroll down a ways, but we'll find it. Because people, they tried to convince people that should know better, right? They should know better, but they just don't, that Bitcoin is not a bubble. It's about to take off even more. But then what they're doing is they're looking at the linear chart. So let's go down here. Come on, man. I think I got like close to 900 likes on it. 850 likes. That's pretty good. Anyway, I'm convinced that most people who refuse Bitcoin exposure are linear scale maximalists. Looking at this, it's understandable that they come away thinking, yeah, it's a bubble. So you can see, looks like much more like a bubble in this chart than it does if you go to this chart on a log scale. So yeah, very funny. That's a lot of bare fuel. A lot of bare fuel. Okay, so now let's go back to Tom Lee. I'm jumping all around here, guys, but that's fine. I'm going to respond to your comments. Green, are you not able to see the screen? It should be going on Telegram. All right. So we looked at that one. Here's Tom Lee. Let's hear what he says here.
95% of all Bitcoin's been mined, but 95% of the world doesn't own Bitcoin. So I just think that there's still a huge demand versus supply imbalance, meaning there's a lot more potential buyers of Bitcoin over the next 10 years. And so I think there's a lot of upside into year end.
Into your like 150 target?
Yeah, 150, maybe 200, even 250 this year.
What? 150? Yeah.
This is an old one, actually. It's from like last week.
200 to even 250. And what's your, you don't have a terminal price on that, do you?
Well, it's, I think at a minimum it should have the same network value as gold. Mm-hmm. And if you look at above ground gold, it's probably 23 trillion. So that would be, 1.2 million for Bitcoin. But I think Bitcoin is more valuable than gold. So, Bitcoin could be 2 million, 3 million long term.
All right. Yeah. He sounds real good, but apparently he's just parroting, because he's pumping Ethereum. We have another one here. Let me go and find that. It's another one from him today. I think it was from today. Come on, man. If I can find it. Maybe not. We'll have to find that later. Okay, let's go through some other things. Let's go through Jack Mallers. This is a 6-minute clip. We'll watch some of it. We won't get to all of it.
Let's start with the logistics here. Can you give us an update on the status of the SPAC? Yes, it's progressing well. We're hopeful to be approved shortly and list the stock on a stock exchange under the ticker XXI. So these things take time. Obviously, we're dealing with the SEC, but I love the attitude of the new administration, and we're hopeful and excited.
Yeah, Jack, I wonder what is the plan once the SPAC is approved and starts trading as far as raising capital? You know, obviously, Michael Saylor and Strategy have been very creative, basically inventing their own sort of securities to sell and sort of lever up to buy Bitcoin. What is 21 Capital's strategy once it is up and running in the stock market?
To buy as much Bitcoin as we possibly can. We've been successful with convertible bonds to date. That's a fixed income market we'll look to continue to tap. We're excited to have our stock actually listed on a stock exchange, and we'll have an ATM program as well. And then there's a vast array of other options that we're very excited about, and we have an operating company. I think one of the main differentiators between 21 and some of the other businesses is that we plan to build lots of cash flow within the industry itself. I mean, Tether and I come with a vast amount of operating experience. We've built big cash flows within this industry. I mean, Tether specifically. And so I think we're going to be buying Bitcoin with cash flow. I think we're going to use convertible bonds. I think we're going to use the ATM and some other instruments that effectively we're a capital allocator. Take dollars and plug them into an asset that is pristine where capital can live safely.
You know, Jack, and obviously.
So bullish, guys. So bullish. I think it's funny. He's always in this empty closet. In a spare bedroom in his mansion outside Chicago somewhere. But yeah, just very bullish. Very interesting that he's talking about Tether's cash flow being part of 21. Of course, they're just partial owners of 21. So Tether's cash flow is not going to be counted in 21's, but they're going to build something that cash flows. And he's just saying that they have experience building cash flowing businesses in the industry. And so they're going to do something like that. Very interesting, very, very bullish, and love Jack. He seems very grown up right here. You know, he was kind of the wunderkind of Bitcoin, and now he's all grown up, CEO of a major billion-dollar company, and it's great to see. All right, here was one from the Bloomberg terminal. BlackRock Bitcoin ETF drives more revenue than its S&P 500 fund. Summary by the AI is iShares IBIT has generated more revenue than BlackRock's iShares Core S&P 500 ETF with an estimated $187 million in annual fees. Remember, this very low annual fees too on Bitcoin. Something like 0.25% or something on IBIT. So IBIT has seen a torrent of cash from institutional and retail investors. There's the retail. That is where the retail is buying these ETFs, drawing inflows in all but one of the last of 18 months, and now holds more than 55% of all Bitcoin ETF assets. The surge in Bitcoin's ETFs is attributed to the U.S. regulators opening the door to mainstream adoption, leading to an influx of capital from hedge funds, pensions, and banks, and solidifying Bitcoin's supremacy over smaller altcoins. Okay. Yeah, Bitcoin is the only thing of interest in this sector. Okay, I thought this was a good tweet from Joe Carlasari. He is very level-headed. I don't agree with all of this stuff, but at least he is contrarian. Okay, he's not. A lot of his calls are contrarian, and he's not just riding the waves of popular sentiment, which is really what most people do. And I've noticed this too from popular macro analysts and macro commentators. Most of them just, what's the term I'm looking for? They speak to the crowd. They confirm the bias of the audience, and they go that direction. So they're going to be bears on the stock market, bears on the dollar, bears on the U.S. in general, and they're not really having legit analysis. They just are confirming people's biases, and Joe Carlasari is not one of those people. So that's why I appreciate his content. But if you're a young person, one of the worst things you can do is listen to doomer boomers and get discouraged by all that is wrong with the world. Never forget that you get to decide what your future looks like. Don't get paralyzed by pessimism. Paralyzed by pessimism. There's opportunity everywhere, and you have more tools at your disposal than any generation in history to help you innovate and create. And if you live in the US, you are profoundly blessed. Be grateful for that. 100%. I think it's going to be harder. I think that there's going to be a lot of changes happening socially. You have to be prepared for what's coming. You can't just put on rose-colored glasses and go out into the world and act like, nothing is, there is no, this generational paradigm shift is not happening. You have to look at things very soberly and plan and make your plans, make your predictions, and go with it. That's one reason why I do this show. It's partly for myself because I want to look into these things and understand where we'll be in 10, 20, 50 years from now. And I want to bring you guys along with me and give you that content of you being able to prepare yourself as well for the next 10, 20, 50 years out into the future. So again, I agree with Joe. It's not good to be paralyzed by pessimism, but you can't just have rose-colored glasses on. You have to go out there, and there is opportunity. There's not as much opportunity as there was like in the 1980s. Okay. But there is opportunity out there. And you can find joy in many things. So a lot of times people aren't getting married. They're not having kids. They find their joy from their paycheck, how much money they're making. Are they getting ahead of other people and in this competition? But over the next generation, it's going to switch much more back to finding joy, not necessarily in your wage, but finding joy and success in marriage and having a family. And, are your kids healthy? Are they happy? Are they successful? And so, yeah, you can always find joy, and there's opportunity for satisfaction in all parts of your life. And just be glad that you live in this time when we have modern conveniences, we have electricity, we have air conditioning, all that stuff. And yeah, just plan for the future and get off your butt and go do it. Okay, so that's enough of that one. Florida Bitcoin, what's going on? Dex Invictus, they grow up so fast. Yep, I know, man. My oldest is going to be leaving in 2 years. John J., when do you see the euro and yen going down? DXY been getting crushed. Okay, let's take a look at that. We'll come back to Twitter in a second. Let's take a look at those. So we have euro, and this has been very surprisingly strong. Let's see if my arrows are on here and stuff. I have the Swiss franc on here as well. This is very strong, but it will get weaker as the recession spreads and gets worse, gets deeper. People will flee to the dollar. It's still a dollar-denominated world, a dollar-denominated economy, and so the euro generally loses in that respect. There also could be some effects of tariffs here on the DXY specifically, if it lowers the amount of trade that's going back and forth. We can see perhaps more trade going within the Eurozone between member nations of the Eurozone versus going across the Atlantic. And so you could have a brief increase in demand for euros because of that. That can be causing this price spike, at least adding slightly to it. But overall, when shit hits the fan, the dollar's going to go up because everyone's going to be rushing into the dollar. They owe, there's 20 trillion or more dollar denominated debt in the world outside of the United States. To pay that off, you have to have dollars. And when shit hits the fan, you're not able to raise the money. You're not able, through normal business operations, get money to service your debt. You have to go in there and trade the euro for the dollar to pay your debts. And the dollar will get stronger. eventually when we get into recession. And I'm really not worried about it. This, you could even draw some sort of trend line here. Looks like it might be about ready to peak, and it will be down again at parity within the next year or two. Okay, and then the yen. We talked about this specifically. Here are my arrows. So get this a little bit nicer. It's really hard to make a trend line off of 2 points, but that's what I did here. And then we have these two ascending wedges falling back down to the bottom. And this level has been defended multiple times. 140 has been defended multiple times. That's a strengthening of the yen versus the dollar. And I expected this to go back up to this trend line, and then we talk. We talk when we get closer to this trend line. And if we break down below this support level that the BOJ and the government of Japan has been defending, then we need to worry. That means the yen is getting stronger. There's carry trade implications. There's all sorts of things about that that we should worry about if it breaks this long-term support line. So that's what I'm thinking about for the yen. The yen will continue to devalue against the dollar. If you zoom out, we're on a weekly chart here. I mean, it's going up and to the right. I think it will continue. It's just a matter of when that happens. Okay. I think that's all. Dex and Victor says, glad we live in America. Yes, sir. I am glad. All right. Taking a look at Telegram, see if there's any comments over here. Okay. Well, Ultra Greg. This is in response to something I posted earlier in Telegram, but you say you were listening to a podcast yesterday, and the stat was in 1979, 1 in 23 American citizens were born outside of the United States. In 2024, it was 1 in 6 American citizens were born outside the United States. That's pretty remarkable difference. Yeah, that is. That is a remarkable difference. I think lots of things are going to be changing. Trump is winning at every level in the courts right now. Everything he takes to the Supreme Court is he's winning on it. Had a big win just last week, and we'll probably continue to see people getting deported. And also the guys, Mondani or whatever his name is there in New York, if that's what the Democrats have, they're in deep trouble. They're not going to be able to win nationally with that, with straight up communists, right? They're not going to be able to win. So, and I think by forcing voter ID and forcing paper ballots, there's going to be a massive wake-up call in the midterms, a massive wake-up call in the next presidential election. I think it's going to go big time for Republicans and for MAGA. I would love to see states like California losing electoral votes, because if they don't count illegals in the census, they're going to lose a bunch of seats in Congress, and then that will go to other states like Florida, Texas. I mean, Texas has a lot of illegals as well, but I think that's good. All things are going in a good direction right now. So just like Joe Carloseri said, we can't be pessimistic about this stuff. Okay. Let's share this tab. Forgot to do that. So that's that. This is by Isabella Corsair. Who else feels like this? Okay, so there's a meme of all these plastic girls and then a Bitcoiner that's nice and lovely and respectable. Yep, I think that's true, because she has her head on straight. There's not a lot of women in Bitcoin, at least that are like hardcore and can talk about Bitcoin in any depth, and that's really because it's chart heavy, it's math heavy, at least the concepts are, and so that tends not to appeal to women as much. But they're, behind every guy in Bitcoin, there's probably a supportive woman. So that's good. All right. Now this was interesting. So Checkmatey, he was on TFTC with Marty Bent, and he says we are in a new paradigm. What it looks like is stair-stepping grind to 1 million. What does that sound like, guys? That sounds like what I've been saying for such a long time. 6 months or so after I said, okay, the 4-year cycle is dead. I even have it on my chart permanently. Let's go to this chart and go to Bitcoin. And I think it's at the bottom. Let me find it. Is this it? Yeah. Yes, but I need to go to log. And we're on a weekly chart. So what I did was, drew a straight line here. I was like, man, this is like a new paradigm where we're going straight up, right? Well, what happens if this is what we see from now on? We see, get rid of these things. What if we see these stair steps just continuing? Let me make sure that's sharing. Sorry, guys. Noob here. Okay, so what if we just see these stair steps continuing? And I back here, I probably put this on the chart back here in March. But I started fleshing this out prior to that, maybe a month prior. So it's been about 6 months that I've been talking about this stair step and just extrapolated. I took this and I superimposed it up here. What if there is no top? What if we just stair step our way and we have these consolidations where the price is pinned by sophisticated trading strategies, for market makers and all this stuff. You also have a different quality of holder with ETFs and with these treasury companies. So what if we don't get major sell-offs? What if we just get this stair step new paradigm going up? It's very, very possible to do this. I mean, this is showing 500,000 or close to 500,000 by a year from now. Or sorry, that's 2027. So 2 years from now, 500,000. That's possible. But then last week, I started getting, and 2 weeks ago maybe, I started getting more into these zones. So let's take this bars pattern off. Oh, wait, let me go all the way down. Sorry, hold on. All right, now let's go into these supply zones. Let's see if I have them up here. Is this one it? No. Yeah, that was it. That was it. Okay, so we have these supply zones. And this first one, let me hide this. This first stair step happened to be at the all-time high. See that going back here? And I'll take this off as well. It happened to be at the previous all-time high, and we just gobbled up all the Bitcoin available that was unlocked when we hit a new all-time high. And we went sideways for 6 months. Okay. Then the next stair step higher was this 100,000 stair step. And I actually made it a little bit thicker to combine them to show that this is actually a combined stair step. But, we could just put it up here at around 100,000. That's where more supply has been unlocked. So it just happens to look like a stair step, but this is really just a divided liquidity zone. And if you go back in time, you have something very similar around 10,000. Again, a multiple. 100,000, 10,000. And that went on for a long time. And finally we broke out, after COVID there at the end of 2020. And if we go down even lower, we have this $1,000 support level or supply level. And in this whole market run up in 2016 to 2017, the only part that we went over twice, where the supply was sucked up twice, was at the previous all-time high at $1,000. And so that was $1,000. Then we get the next multiple of 10,000, and then we get the next multiple of 100,000, which is why I kind of went like this And we also had, you saw that orange little bar pattern right here. That was if last cycle wasn't cut short and we actually would have got to 100,000, all of this liquidity would have been consolidated around 100,000. So again, the way I got here was I started talking about stair steps 6 months ago. Then I noticed on Rational Root, on his chart, he was talking about these supply zones. And so then I went more, I examined more, I went deeper into these supply zones. I found them at 10,000 and I found it at 1,000 in these multiples. And then I rationalized saying, okay, well, we were at the previous all-time high, which should have been 100,000. So we should have had a supply zone at 100,000. So now where's the next supply zone? Where's the next period? Where's the next stair step end? That's the question. That's the question. Could we go to 1 million? I mean, that's the next magnitude higher, right? From 100,000 to 1 million. It's possible. I would say that it's not likely. We'll find another supply zone somewhere, whether that's 200 or 250, and then we'll go sideways, maybe in a stair step. But then maybe we go like that, something like that. There's a slight difference in analysis if we're using these supply zone ideas in multiples versus if we're just talking about the straight line stair step, or if we're talking about cycles, the 4-year cycle, where would the top be? I also went back in here and said, okay, well, what were some of the multiples, right? How high did this get, this first one? Well, this went up from the supply zone. Let's just go from 10,000 up here to 63,000. I mean, we just use an easy add a 0 to that. So the next supply zone might be around 500,000, between 500,000 and 750. That's where this one stopped in the previous cycle. So that would be something like, like that. And then this stair step might be longer, but it's a hop, skip, and a jump from a million. So anyway, that's stuff I've been talking about here over the last couple of weeks, trying to dive deeper down into that. Okay, let's go back to this and we'll listen to Checkmate here. Actually, this is an hour long. I didn't listen to this, obviously, but I wish I knew a good point to jump into it. I'll have to watch that, and on another live stream, we'll come back and watch the important parts of that. All right, talking about ADP and jobs, here is a chart. Oh, I'm not sharing. I was sharing the wrong thing. Okay, so here is the jobs versus recessions. You see as layoffs start going higher, we always get a recession. And we've been going up for over a year, almost 2 years now. Are we in recession right now? Probably. I mean, we had negative GDP, significantly negative GDP in the first quarter. We probably won't have it in the second quarter, but there are some things that some calculation problems there with the GDP, because you have the effects of the tariff on the first quarter. And really, GDP is so tightly controlled by credit growth and those types of things that I don't think it gives a very good explanation of actual growth in the economy. It's the best thing we have. Like I've said in the past, it's the king of all macroeconomic indicators, but it needs to be revised. Okay, GDP needs to be revised for sure. Oh, and you can't even see that. Move my big head over to the other side. All right. So that was that one. Okay, here, this was interesting. So if, God forbid, America were to fall, what do you think caused it? Okay, America's not going to fall, but look at what they say here. They say it's either war, civil war, nuclear war, or World War III, replacement of American people by mass migration, or economic collapse. I don't know. I said Marxism. If it is going to collapse, it's going to collapse because of Marxism. But I don't think it's collapsing anytime soon. I mean, we're going into the golden age of the United States. We're going into the next 250 years. The next 250 years is going to be the golden age of the United States, I believe. We got to go through a period here where demographics are going to drag down the global economy. We're going to go through some deglobalization. We're going to go through some pain. But the United States is going to separate itself from the rest of the world. So, after World War II, the United States was what, 50% of global GDP. And then we got down to 20%. We're going to get back up to 30 or 40% over the next 250 years. We're going to grow relative to the rest of the world. It is the U.S. golden age, especially relative to other places in the world. Okay. This was interesting. So this guy said his son is 3 weeks old today. Tomorrow will be his 100th straight day of selling $5 in fiat in exchange for Bitcoin. That's a lovely, lovely thing to do for your kids, is just stack sats. And the idea of retirement savings, you want to front load as much retirement savings as you can. So the first few years that you work, you need to max everything out as much as possible because of compound growth, right? Well, it's the same sort of thing when you think about Bitcoin, stacking Bitcoin for your kids. Right when they're born, you got to stack hard for them when they're born. And then by the time they're 18, that can be something to set them up in life. One idea that I've mentioned a few times here is the return of dowries. I think there will be a return of dowries, and setting your kids up in life. Instead of waiting until the boomers die, and then you get some inheritance back, maybe if they don't spend it all on themselves, but you get some inheritance when you're 40 or 50 and your kids are grown already, right? Setting your kids up for life with a dowry or with something in the beginning. For my girls, maybe it'll be a dowry. For my son, maybe we'll get him a house or help him get a house. And so that is going to become more normal, I think, much more normal. Anyways, that tweet made me think. Okay, Checkmate has also been talking a lot about manipulation. And here on this tweet, he says, I believe all of the following are true regarding Bitcoin markets. The price is manipulated by whales and traders, but only on small time frames. And I agree with that. Whales fight each other, okay? There is no grand conspiracy of manipulation in the Bitcoin price, because if there were, a bigger whale would make money by liquidating another big whale. Okay, so there are whale wars happening, and there is some manipulation, but every single transaction is slightly manipulation of the price, right? That's how price is actually set. If I sell, the price should go down, right? I mean, that's how it is. That's how we find a price, a market price, is every transaction marginally affects that price. Every transaction is manipulation of the price. And there can be some short time frame conspiracies that do affect the price, but it's a very short time frame because there's a big incentive to blow them up, all right, to backstab. Next thing he says, paper Bitcoin exists in derivatives markets, but it is expected and necessary for maturity. My reaction to this was, yeah, of course. I mean, if you want 100% unmanipulated market, Bitcoin's not going to grow past $10 billion market cap. Okay, when you start getting into the trillions, 10 trillion, $20 trillion market cap, there's going to be a lot of this funny business going on. But it's not an overall manipulation of the price, okay? There's some background noise level of paper Bitcoin. There's some background noise level of just shenanigans going on in the market. And you have to expect that. If that weren't happening, Bitcoin would not be a big market. Andreas Antonopoulos, years ago, he said, it's not money if you can't buy drugs with it. Okay. Well, it's not being adopted if there's not some background level noise of manipulation. There are probably unbacked exchanges out there, but you've never heard of them. That's a good point. Coinbase and the ETFs have the coins. And the real risk is how fucking many they have. The price is suppressed by heavy selling in spot markets. So he's saying it's not being suppressed. It's actually just the result of regular business. And I agree with that. All of this is how normal markets function, and no follow-up point was needed. Yep, that's true. I agree. So that was a good one there by Checkmatey. Andreas sold his research outfit, I think, to Real Vision, he says in here. So congratulations to Steno. What else we got? All right. My family chat's busting. I have to mute notifications. Stand by. All right. Make sure I'm sharing the proper screens everywhere. Check the chat. John Delaney, can Powell do what Trump wants? In what respect do you mean? Like cut down to 1%? That's the latest, is he wants to get the Fed funds down to 1% or 100 basis points. Not a 100 basis point cut, a 300 basis point cut down to 1%. He can't do that. I mean, he can, but it would be so outside of character that he would never do it. And everyone would lose confidence in the Fed if he did that. So I don't think that Powell will be doing that. I think it could be a 50 basis point cut in July. That's possible. Dex Invictus, Democrats trying to destroy themselves for real. Yes, they are. Yes, they are. All right, let me check Telegram. Larry Jr. says, if Elon tries to start a third party, peeling off some Republican voters could leave razor-thin margins in the midterm elections unless they can greatly reduce election fraud by illegals and election stealing by the Democrats. I agree with that. Any third party by Elon, I don't see them getting much more than 5 or 10%. And Elon is threatened. See, what he's threatening is he's threatening to peel off the VC. He's threatening to peel off Silicon Valley. Mark Andreessen et al., Elon, a bunch of the other big guys, Chamath, the All In podcast guys. Those are the people that Elon is trying to peel off here. I don't know if he will be successful. It's more of a threat, and it's also in the news. He's staying in the news. He went in, he did his thing. Now he's out. I think what he's done with Twitter as a free speech platform is amazing, and we owe him a great debt of gratitude just for what he did with X. And then we have this Doge, what he tried to do with Doge, which I think was a good faith effort. That's all good. But again, Trump is the manifestation of the people's will right now. And I think Elon can't really mess with that too much. Anyways, let's get back to these tweets here. So this was another one from Joe Carlasari that I thought was really good. And let's make this bigger. Everyone should be prepared for a world where even at 500,000, the vast majority of academia, government, financial media, and even your family and friends will ignore, ridicule, and dismiss Bitcoin as irrelevant. Only when it becomes a necessity rather than a preference will critics finally give up. Yes, I agree. And it's also, if they know a Bitcoiner that held and did well, it's going to be doubly hard to admit they were wrong because it was right there in their face. It's going to cause some mental health problems with these people. I mean, right there in your face, and you dismiss it. Right there in your face, and you made fun of people, Bitcoiners. Like, let's say you have a brother and he makes fun of you because you have Bitcoin, and then you become a millionaire and he's still sitting at his 9-to-5 job miserable. That mental toll that it takes on you is going to be pretty great. And so I thought this was a really good tweet from Joe. It made me think as well. So, okay, let's go back, see what else we got here. Oh, this was funny. So they have this app where you can report, track where ICE is and warn people. And this guy made a funny comment. You can spam it. Hey, are you tired of illegals in your area? Wish there was a way for them to go into hiding? Falsely report ICE sightings at your local supermarket, hardware store, and watch the illegals flee the area. So I thought that was pretty good. All right. Oh my gosh, guys, this was a good one. I think I responded to this, but maybe I didn't. So this Justine Moore said, anyone can be a hot girl now, a hot girl online with AI, right? This account started posting 3 months ago. She now has 140,000 followers and gets shockingly few comments about being AI. And this Tyler Neville says, this is actually going to be the downfall of social media. When the cost of access drops to zero, you flood the zone with shit. This is what happened to mainstream media and podcasting. There will probably be new platforms that emerge where you have to be human. People are going to crave real art again and human connection. And the age of technocracy is slowly ending. I think I did. Yeah. I said, I've been saying for years, AI is going to be a noise machine. Finding signal is going to be much harder and more expensive. So not only is AI, does it have exponential cost just in the hardware, right? And the electricity and the power and all that stuff. It has diminishing returns and its, I guess, efficacy. I don't know exactly what its value. It has diminishing returns on its value, exponential cost. At the same time, it puts noise out there and it increases your cost. It increases everyone's cost to find signal, not just here on these fake girl AI things, but information in general. All this AI generated information. Wait until there is real competition between AIs and you sick an AI on another AI and you say, you tell your AI, I want you to swamp that other guy and his AI with fake data. Go. And everybody is flooding each other with fake data. The noise level is going to be extreme, and the cost to sift through that noise, it's going to provide what it will do is it'll push you to even spend more money to make your AI even better. And that adds to the exponential cost of the whole thing with diminishing returns because of the noise. So yes, AI can be used to automate some things. It probably will be used to do that. But overall, it's not going to be life-changing. And if you are a competitor, you have competing AIs, you're going to attack the other AI by flooding it with junk. All right. So that was that. Thought that was a good post. Okay. Here we go. Nate Geraci. He is the guy that works for Bloomberg ETFs, right? Let's see, president. No. He was big with the Bitcoin ETFs. He talked about them a lot. He is an ETF guy, host of ETF Prime, co-founder of ETF Institute. Okay, so he's just in the ETF space. And He said, still wild to me how defensive various crypto factions are. There's room for everyone. Because he put out a tweet of Ripple, like Ripple looks good here, right? And there was some news about Ripple, so he was like kind of pumping Ripple a little bit, and I actually responded to him and said, "Sell the news, puke." Maybe it won't, but that was my visceral reaction reading his first tweet. And there's probably a lot of other people in the comments or in the replies that said, "No, Bitcoin is the thing. Be Bitcoin only. Ripple is a scam, yada, yada, yada." And so then this is what prompted him to write this tweet. Still wild to me how defensive various crypto factions are. There's room for everyone. Rising tide raises all boats. Mainstream adoption means competition. Competition makes you better. Thanks, dude. Thanks, man, for the 101 lesson on business and economics. That's great. That's great. You're stuck on 101, and we're at graduate level studies here telling you that Bitcoin, PhD level, we're PhD level telling you that Bitcoin is the only thing that matters and XRP is a scam. All right. And you're trying to give us Econ 101. My goodness, dude. My goodness. I think half of all people are just, they're not really smart. They just kind of ride the tide. They learn the talking points. Like this guy, he learned some Econ 101 talking points, and now he gets a job about doing ETF analysis and talking about ETFs, but he's just regurgitating, right? He's just an NPC, just regurgitating what he's heard, a parrot. And he's trying to tell PhD level Bitcoiners that competition makes us better. So we should like altcoins. Mainstream adoption means competition. So we should like altcoins. He doesn't even know what competition he's talking about. This is monetary competition, dude. Okay? Monetary competition. There will be only one. Right? Rising tide raises all boats. No, dude. What about rug pulls, man? What about rug pulls? Those people get wrecked. Okay? There's not room for everybody. Most people won't get in. We just talked about Joe Carlos' tweet. Academia, professionals, they're friends and family. They're still not going to get in. There isn't room for everybody. This is a very niche field, and you have to be Bitcoin only. Like understanding the nicheness of this field gets you to Bitcoin only. So anyway, what an idiot. Okay, what else do we got? Robinhood CEO. This was a big thing yesterday. He just looks like a scammer, a little bit too done up with a handkerchief or a scarf tucked underneath his shirt around his neck. Someone was saying he looks like a younger Johnny Depp or something. I don't know, but this is going to end very badly. This Robinhood thing, it's going to end very badly. Okay, so if you guys are watching on YouTube or Twitter, I've been live streaming for a long time, going back several years. Took a break. I'm back. So if you're finding me now for the first time, this one is going to give you an introduction into my kind of overall macro thesis. So John Haar here, he's an inflationista. John at Swan. I like him. I mean, he works at Swan. I really like Swan as a company. I like the guys that work there, and they do great work, God's work for the people by promoting Bitcoin and getting Bitcoin into people's hands. But I disagree with him here on economics. And so this was a tweet that he is talking about. So it doesn't give the whole conversation here, but I'll bring this up. So Jack Ever, at lack ever. He said, what Fred said about debt is very reductive, but lending still happens in a full reserve system. The trade-off is growth would be slower, but more sustainable, less boom-bust cycles. Don't think it is accurate that we'd still be living in the Stone Age. Okay, I totally agree with that. Their lending still happens in a full reserve system. You have commodity credit or circulation credit. Commodity credit is lending from savings. You have deposits, and they're time deposits, or they are in accounts that allow the bank to lend. There's other demand deposits where they really don't use those deposits for lending to back up the full reserve system. So there is lending in that way. And circulation credit would be fractional reserve. You can only keep about 10% of your deposits, or you can lend up to 10 times as much as you have deposits, because not very many people will come in at the same time to withdraw their money. That's a fractional reserve system. We really don't have that now, because think about it, in a fractional reserve system, you have to check your reserves before you make a loan. Like, let's say some guy, you're a bank, and some guy comes in and he wants $1 million for his business. All right. Is that banker going to go to the balance sheet and say, okay, let's see, these are our deposits, and we have to keep our reserve ratio 8%, and this loan will actually put us at 7%, below 8%. So we can't make this loan because we need to keep our fractional reserve minimum. No, they don't say that. They say, is this guy creditworthy? Yeah, give him the money. Give him the money into his account. We're not checking our reserves. We're not fractional reserve. We're credit-based money. See? Credit-based money. We're not fractional reserve. So that's not really anyway. So I agree. Pretty much I agree with this. We'll have much lower growth in a hard money system, much lower growth, because growth comes from expanding credit. You also get misallocation of money, right? And malinvestment and misallocation in a credit-based system. But that is growth. So like in a boom bust cycle, think about this, right? At the beginning of a boom bust cycle, the boom, you're lending out a lot of money, elastic money supply. You're expanding the money supply, and you're getting growth. But what happens on the back end? Degrowth, disinflation, or deflation, outright deflation. Money supply shrinks, and you get a bust where that malinvestment becomes obvious. But that malinvestment initially led to growth, right? So credit, expansion of credit does lead to growth. But it will bust, and it will eventually lead to deflation. And you can't escape that. Mises said you can't escape the bust. So we have a 75-year bubble. Now we're in a long-term bust that's been going on since the Great Financial Crisis, and we can't escape the bust. We can't reinflate the bubble. We have diminishing marginal returns on debt. We cannot grow our way out of it. We cannot reinflate the bubble. We will bust. It's just a matter of when. You can kick the can down the road. You can even kick the can down the road for 50 more years, maybe. But you will never get growth out of that. You'll be stuck at 1% growth. Everyone will be miserable. We won't have the opportunities like the 1980s or the 1990s. We'll get lower and lower economic activity, more and more mental illness. That's what we'll get if we keep kicking the can. But it is possible. Okay, then this phase U, however you say that. I know the Great Depression was made way worse, the Great Depression was made way worse because we were on a gold standard and they couldn't stimulate effectively, right? I mean, that's a counterfactual. You can't prove that. I know that's been said, but it is a counterfactual. And we're in a way different Like we're looking from a modern lens back onto history, and I don't think we could do that. All right, so let's look at what John Haar has to say about this. So he's saying proponents of elastic money. I was going to respond to this, but I ended up not responding because I went back and forth with him last time and we didn't get anywhere. So proponents, I wouldn't say that. There are proponents of elastic money. Jeff Schneider is one of them, but that's not dealing with the argument. That's dealing with the person. Okay. It's kind of like beginning your argument here with an ad hominem. I'm speaking about the proponents. I'm not speaking about the idea of elastic money. I'm speaking about the proponents of elastic money. Okay. I don't like that framing of the argument because it's counter productive. It's counterproductive to make your argument from an ad hominem. You're not even talking about the arguments at all. And if this is the level of your analysis, or this is the framework, that the type of analysis that you do, that you analyze the person rather than the argument, you cannot understand what's going on. You have to dive into the arguments. And that's what we do here on the show. So he's saying this is what they would say. We must be able to expand the money supply because eventually the money supply contracts. And then we must be able to expand the money supply to deal with the consequences of the contraction of the money supply. Okay, so see how this is an argument from a human action. It's an ad hominem framework. So what we should do, I believe, in my opinion, the better way would talk about the money supply as not a consequence of individual action. The money supply expands. There is a saying that I've used and others have used that if they can inflate, they will inflate. Okay, it's just part of human nature. If I am a business owner and my business is booming, I have the opportunity to add to my business, to buy another truck, to add another line in the factory, to hire 2 more people, okay? Or maybe hire 100 more people, and he'll start a whole new division in a whole new city. What am I going to do? I'm going to borrow that money, right? And that borrowing of the money is done because of the opportunity for profit. It's not like the banksters say, we really want to expand the money supply. No, the money supply naturally expands because of the extension of the credit, because of the business opportunities. But see, when you start your argument from ad hominem proponents of elastic money, you don't analyze what's actually happening. You analyze the motivation behind the person. And that's what this is doing. This is analyzing the motivation, which that has no place. That has no place in discussing macroeconomics, in my opinion. John is a smart guy. He works at Swan. He's a successful dude. A nice guy, I'm sure. I don't think I've ever met him. But this is wrong. Okay? The money supply expands because there is profit in it, because there's a profitable place to employ that new money. And yes, the money supply will eventually contract because along with that, there is malinvestment and misallocation and diminishing marginal returns. And it eventually busts. This is a boom bust cycle. It's natural. And then they try to expand the money supply to solve it, but the money supply expands again when the zeitgeist, the milieu of the market, becomes positive again, and there's opportunities to employ credit productively, and it comes back and the money supply expands again. See, it's natural human nature. It's not proponents of elastic money. It's not an ad hominem banksters. Okay, this is the nature of credit-based money. And we can juxtapose that with the nature of commodity money. But nobody is ever going to consciously pick commodity money. I don't think that's the truth. I mean, we pick it, we choose to save in it because we think it's going to be successful and we think number go up. Okay. If Bitcoin was, the price constantly went down for the last 10 years, it lost 10% every year for the last 10 years. Okay. We would not be in it. We are in it because number go up. And then you can make yourself feel good, say, altruistic, oh, this is going to fix, Bitcoin fixes this, yada, yada, yada. But we own it because number go up, period. And why do we think that's going to continue? Because we are evaluating the state of the economy. We're not evaluating the proponents of inflation. And we're not picking Bitcoin necessarily because of its, we're picking it because the number go up. So anyway, I kind of went all over on that, but hope you guys learned something. Maybe you'll have some questions that can clarify my thoughts. All right. Well, that's going to be it for today, guys. Let's see. It's 4:30 p.m. Eastern time. I wanted to spend some time with my boy here before the end of the day. So I'm going to end it there. Let me just go back here, share this tab. Make sure to check out bitcoinandmarkets.com. That's where I put out all my stuff. If you're watching on X, check out the YouTube or the Telegram. I'm on Telegram all day, so you can find me there. Join the group. And so here is the website. We have this little fun competition where we forecast the price every month, and the closest person wins $20 in sats. I'll just go into this. Let's see. And then I'll go to the Hall of Fame page. So you can see when you win, you get your name on the Hall of Fame with a little wizard. We have a bunch of people. Dave S. has won it. How many times? 8 times. Jeez, Dave. Let someone else have a chance. And you get your name up here. So this is all the people going back all the way to, let's see, when did we start this? 2019. Mr. Paz was the first winner in December of 2019. But it's a fun little thing. You can win $20 in sats. You have to be a member, though. You have to be a paid member on the website, either $5 a month, or if you want to get the pro stuff, my pro content that comes out multiple times a week, you can sign up for the $15 a month. If you want to pay in Bitcoin, I'll even give you 50% off the yearly cost of the pro membership. So if you'd like to spend your Bitcoin and you'd like to send me your Bitcoin, you can get a 50% discount if you pay that way to the pro tier. So, all right, guys, that's going to be it. Signing out for the day. See you on the next live stream. Bye.